We have with us Vinod Kumar, MD and CEO of Tata Communications. Vinod, thank you for joining us on BloombergQuint today.
Great, thank you.
To begin with, the data revenues have been growing well for you in the last couple of years, and you've turned positive cash flow positive also on data. What is the kind of strategy that you have for data?
See, data right now accounts for 78% of our EBITDA and 56% of our revenues. So we're very pleased with the role that data plays in our portfolio. It is clearly taking over from the role that voice used to play in the past. From a data perspective, we have different elements of the business. Again, if you look at it, our traditional services are growing in volume and also showing that there's clear operating leverage. In other words, we're able to scale revenues faster than the costs, and that's showing in improving margins there. Our new services are growing steadily, but we're also adding many new services and building a pipeline of market relevant services that are helping us be more pertinent to customers, at the same time increasing our addressable market. So overall, we're very happy with the way the data services have grown. They've actually grown 14% year on year in terms of revenues, which is really industry beating growth rates.
Globally we have seen voice revenues, shifting into data revenues. Are you seeing the same kind of signals here for your company? Because the data revenues have grown for you, while voice revenues have fallen for Tata Communications.
So there is some shift of voice to data, but our data, but the amount of data or capacity that voice consumes is quite small. So I won't say data is growing because voice is declining, but data is growing because of companies moving from, the phase of what I call looking digital to being digital. Data is growing because we have a broader set of services, from connectivity to collaboration to hosting to storage to media content platforms, so on and so forth. So that's the reason why we're seeing growth in data.
But even traditionally, if you look at some of the companies, they were they're moving away from the look and feel digital to how they function digitally. What kind of opportunities that bring in for a company like Tata Communications because of the B2B connections that you have?
So one of our big shifts in positioning is that now we look at ourselves as powering the platform economy, right? Underneath that, we obviously drive digital journeys and we drive globalization and cross-border trade. Right? But powering the platform economy essentially is helping customers move from just driving transactions to building communities. And for those communities, they need to have a wide dispersed network in all the right locations, and that's what we do for them.
You were telling us about your CapEx plan, $250 million to $300 million a year. Where is it going to be deployed for Tata Communications?
So our CapEx basically, as you said, is 250 to 300 million. About 60% of that CapEx goes into growing the network to support volumes, expanding the reach of our services, and about 40% of that CapEx goes into creating new capabilities for the future. So roughly, you can look at it as 60% will translate into revenues during this fiscal year, and 40% is investing for the future.
In the last 1 year, you have undertaken nearly $900 to $1 billion worth of strategic sales or high-offs. To focus more on your core, which is data and backbone of that. Is there any more such divestments in the play, and how do you see your debt moving forward, or the balance sheet strength moving forward as you go into that?
So as we said, we've been making a series of moves to strengthen our balance sheet and at the same time focus the business on what is our core strategy. Right? And if you look at ROC right now, I'll just begin with that. We've hit 10% ROC. That's a movement from about 6% last year. So that's directionally very strong and heading towards the 15% that we're targeting in 2018. From a balance sheet perspective, we made two moves this year. One is around Neotel, right? So Neotel is a domestic business, a largely domestic business in South Africa. We want to focus more on cross-border, so we made a decision to exit Neotel. So hopefully in the next 6 months or so, we will conclude that transaction. That will take about $450 million of debt off our books, although that is ring-fenced at a local level. We are selling a stake in our data center business, a 74% stake to STT. It's a strategic partnership, and I can go into that in more detail, but that also will release about $450 million of cash. Some of that cash will be used to pay off the TTSL related obligation that we have, and the rest will be used for a combination of bringing debt down, but also to make focused investments which are strategically important for us. From a debt perspective, frankly, we are already at 3.1 debt to EBITDA ratio, which is very comfortable. We see that coming down a little bit, but that frankly is not a major preoccupation or worry for us at all, because we're already at comfortable levels.
As that innovation comes in your space, and as new technologies come in, are you also looking at some of the new areas, which is analytics, artificial intelligence? These are something that which many of the IT companies are looking at, and some of the data companies are also looking at, because the future growth they claim is analytics, artificial intelligence, big data, and I think you have all those pieces within your company. How are you strategizing your entire focus to ensure that you can lever that tools which are existing in your company?
So one is we're using all these technologies internally to improve customer experience and to drive productivity, whether it's big data or AI or machine learning. In some form we're using them, and I think that's important. As you use them, you begin to learn the nuances of the technology, you learn about applications, and then you can translate that to external use cases and products and services. The second is we are actually working on creating, for example, Hadoop as a service, which is a platform that customers who want to run big data solutions don't have to build Hadoop themselves and can run their data sets on Tata Communications provided Hadoop platform. That's an example. We have an investment in a company called Sentient, which is a leader in deep learning and AI, and we are working with them on improving our network, but also looking at how to create new security offerings, for example. So these are some examples. And in the case of other aspects of AI, we just recently had a very interesting summit in London with 75 CEOs to debate this topic, but to not just talk about the technology, but also talk about the business applications and social implications.
Do you see any headwinds for you as in the next 1 or 2 years, whether in data, whether in technology, whether in new technology which is emerging, which may disrupt the market completely?
Yeah. So in terms of demand, I don't see any headwind. I actually think that the tailwinds are quite strong for us, and we will see good, healthy demand. Obviously, we need to see what market prices do, and price erosion is the challenge that the industry faces, but we plan ahead for it. In terms of technology shifts, I think we're quite well prepared for the trends that are building, but we always have to keep our eye open for small players that might come up with some radically new technology. But the key is, we're talking about large MNC customers, large business customers. They're reasonably careful in deploying bleeding edge technology. Cutting edge they will deploy, and we have that. In terms of bleeding edge, we need to make sure that we have our ears to the ground, and we have quite a few innovation programs and external partnerships to make sure that we are sensing what's happening in the technology world.
Finally, I wanted to talk to you about the TTSL liability, which you said you have already paid up. Can you elaborate on that as well?
So our share of the obligation that Tata Sons has with the DOCOMO is 1,058 crores. That's the Tata Communications share of it. And in good faith, Tata Sons, in order to honor the arbitration award, has deposited the money with the High Court. And so we have put our 1,058 crores with Tata Sons, which is our share. That's been done.
And is that going to impact your growth plans in any manner? Or you're sufficiently cash rich to handle any kind of future growth because of that?
Absolutely. This will not come in any way in terms of our strategic expansion or our growth plans.
And what about the cash flows from the current operations in the going year? Do you see them going up because now data has also turned positive for you?
Yeah, absolutely. So this quarter we generated 670 crores roughly of cash from operations. We believe that we'll be able to maintain that kind of trend, and we are fairly confident that the cash from operations will continue to grow next year.
Vinod, thank you very much for joining us on BloombergQuint.